Namaskar and welcome to the weekly commodities audiocast, your go to source for the latest developments in the world of commodities. I'm your host Ravindra Rao from Kotak Securities Commodity Research Desk, and I'm thrilled to have you join us today. Last week, attention returned to China's real estate troubles and increasing bets on more Fed rate hikes. The US dollar index surged to a 6 month high, reaching 105 levels, driven by subdued risk sentiment stemming from disappointing services PMI print from China and the Eurozone. Meanwhile, the US 10-year Treasury note yield edged closer to 4.3%, supported by a surprising drop in US weekly jobless claims to the lowest point since February. In a surprising twist, the ISM Services PMI for August 2023 unexpectedly surged to 54.5, indicating the strongest growth in services sector in 6 months in the US. The Federal Reserve voiced concerns that this robust economic activity could sustain inflationary pressures, potentially necessitating further tightening. Additionally, the extension of OPEC Plus output cuts pushed oil prices higher, adding to inflationary concerns. On the commodities front, COMEX Gold prices faced downward pressure throughout the week, driven by encouraging US economic data. This led to gold experiencing its first weekly decline in 3 weeks. COMEX Silver also saw a 5.50% decline during the week, influenced by weakness in both gold and industrial metals. Worries about rising inflation may continue to bolster the US dollar, potentially exerting further downward pressure on gold prices in the week. However, there could be some short covering ahead of the US CPI release. Technically, US dollar index is trading on the weekly chart. It is trading close to the 60-day moving average resistance near 100 it is close to 104.99, which is around 105. So if it sustains above 105 on a weekly closing basis, we might see it going higher towards 105.80. But if you look at the daily chart, the support is pegged near 104.50. So until that holds, there is a great chance that it might move higher to 105.80. US CPI data will be crucial this week, and that might decide the direction in dollar index for the coming week. Similarly, in case of gold and silver, it looks a bit range bound. In case of gold, 1938, 1940 remains to be a good support. This is for COMEX Gold, and on the upside, 1984, 1980 remains to be a good resistance. As I mentioned, some short covering is possible ahead of the CPI data, and after the CPI data, we might see what is the direction in dollar index, and that might give a direction to gold prices. Silver has been taking support near the $22 mark. This is in case of $23 mark. Sorry, this is in case of spot, and in case of COMEX, it has taken support near the 23.15 dollar support. It is trading close to the 200-day moving average on weekly charts, which is near 22.43 in case of spot, and in case of futures it is close to 22.60. So until that holds, there is still a chance of prices again moving higher, because the short term trend is still up until the 200-day moving average holds. On the upside, resistance is pegged near $25. Above that, we might see fresh bullish momentum coming in. Till then, we expect prices to stay between 24.45, 24.50 on the higher side, and on the lower side, 22.60 should act as a good support. In case of LME base metals, almost all base metals experienced declines, which ranged from 1% to 4% during the previous week, weighed down by a weak Chinese data and a strengthening dollar. Data from China highlighted sluggish domestic consumption and diminishing global demand for Chinese goods. Import figures have seen consecutive monthly declines, with the latest data showing a 7.3% decline in imports in US dollar terms for August compared to the previous year. Exports also slipped by 8.8% in August year on year. But the best part was that the drop was less as compared to the a previous month's figure of around 14.5%. Copper faced additional pressure, slipping below $8,300 per ton as China's copper imports dropped by 5% year on year in August, coinciding with a surge in LME stocks to 11-month high of 133,850 tons. In case of crude oil, it posted a weekly gain of around 1.3%, reaching a 10-month high at $88.08 per barrel despite macroeconomic challenges. This increase came as OPEC Plus heavyweights Saudi Arabia and Russia both extended their voluntary supply cuts until the end of year. Furthermore, EIA inventory data indicated a significant decrease in US crude stockpiles during the previous week, down by 6.3 million barrels to 416 million barrels, the lowest level since December. In terms of price action, as we mentioned in our previous podcast, crude sustained about $85 per barrel and is now inching close to the $90 mark. Support now is near 83.80 per barrel. If that holds, there is a good chance of the bulls taking the prices close to $90 per barrel mark, which is a good resistance. Looking ahead, the upcoming week will bring a focus on US inflation figures, retail sales data, the ECB monetary policy meeting, and a range of economic data releases. The ECB is expected to announce its final rate hike this week. Bloomberg forecasts that headline CPI, US CPI, will marginally increase to 3.6% in August, while core inflation is expected to ease to 4.3%. Traders may remain cautious ahead of critical data releases from China, while simultaneously hoping for more stimulus measures in light of consistently weak data releases and widespread losses among domestic property developers. And that wraps up another edition of our weekly commodities audiocast. We hope you found our insights valuable and informative. Remember, staying informed and up to date on market trends and developments is essential for making wise trading decisions. Thank you for tuning in today, and we look forward to having you with us again next week. Until then, happy trading.